You guys, this hair situation is just getting out of control. I feel like my hair grows out like this. It's bad. So most of the time I just wear a hat because I'm lazy and it's easier and I don't have to do my hair. But this time, definitely, yeah, okay. If any of you know a good black market barber, then send them my way. You guys, in the last couple months, we have had almost $6 trillion injected into the US economy because of the government. For reference, the entire US debt is right around 23-ish trillion dollars. And so $6 trillion, that's almost 1/3 of the entire United States debt. That's insane. And the government just injected that in thin air because they can. And if you're thinking to yourself right now, how on earth is $6 trillion not going to cause inflation? That's a good thought to have, because you absolutely cannot just inject all of this money into the market, into the economy, and not have there be any consequences whatsoever. That's exactly what we're talking about in this video. We're talking about how all this stuff works and how you can actually protect yourself and hedge against this hyperinflation. And I'm going to share with you how to do that right now. Before we get started, guys, I want to introduce myself. If you're new here, my name's Bryce. I make videos here on YouTube talking about real estate investing and personal finance. If you're not already subscribed to my channel, please do that below by clicking on the subscribe button. Also give me a thumbs up if you wouldn't mind. That really helps us out with the YouTube algorithm. And also, if you want to see a little bit more into my personal life and some of the active projects that we're currently working on, you can follow me down below. There's a link to my Instagram and you can follow me there. Okay, so before we get really into this, I want to explain what inflation is and how it kind of works. This isn't going to be like a super deep dive into inflation because one, I'm not an economist and I really don't understand all the super deep nitty-gritty intricacies of how it all works. But two, it's also kind of boring and it's not that important to go that deep into how it works. You just need to have a basic understanding of how all this works to be able to understand some of the concepts I'm about to go over. In layman's terms, inflation is just the process of your money being less valuable over time. That's why people say that you should never leave money just sitting in a bank account or even putting it under your mattress, because quite literally every single year that passes by, or in fact every day that passes by, your money is becoming less and less valuable. And this makes total sense, right? Like I'm a huge advocate of having your emergency fund, having some cash set aside for the rainy day or when things like that happen. But everything else that you have outside of your emergency fund 100% should be invested in some way, shape, or form. I'm a huge advocate of real estate. If you're not into real estate, that's okay, but it should be invested in stocks or bonds or whatever it is that you personally choose to invest in. Okay, so in super simple terms, let's say we have $1 actually. Okay, so we have $1 right here, right? Let's say you have $1 in your bank account. This dollar, 1 year from now, assuming that inflation is 3% on average, this $1 now becomes 97 cents a year from now. And when I say 97 cents, I don't mean that like 3 pennies actually disappear from your bank account if you just have it sitting there. What I mean is that your purchasing power is now less. Where you had $1 of purchasing power, you now only have 97 cents of purchasing power because your money is now worth less than it was 1 year ago. Does that mean that inflation is a bad thing if your money is going down in value? And it's quite the opposite, actually. Inflation is a good thing. So the Federal Reserve, they're the ones who control inflation. And as long as inflation is at like a moderate level, like 1 to 3%, it's actually a good thing. If inflation is way too high, yeah, that's not a good thing. That's very bad, actually. But generally 1 to 3% is acceptable and a good thing for the economy. When you have inflation, just like I was talking about before, if you've got $1 sitting in your bank account and it loses money, it loses value over time, that actually is an incentive to take that money out of that account and invest it, to take it and put it somewhere where it can grow and make more money. Now, when you take your money and you put it into the market, that process is consumption. When you're buying things, when you're exchanging currencies, when you're doing this, you're doing that, that's good for the economy, because the economy can't grow without consumption. So if all these people are taking all their cash and just hoarding it, the economy doesn't grow and it does the opposite. So looking here, it's pretty interesting actually. I pulled up this website and you can see that in 1930, a loaf of bread cost just 9 cents. That's pretty cool, especially considering that now a loaf of bread you can't get for any less than $2 if you go into the grocery store. So obviously you can see that prices have gone up over time. Now the opposite of this is true as well. There's such a thing called deflation, which is something that we're not really familiar with here in the US, but that's actually the process of your money going up in value over time. And even though this sounds like it's a good thing, I promise you it's not, because it does just like I was talking about before. You could literally take this $1 bill and you could leave it in your bank account, and just simply leaving it there in your bank account, it would become more valuable. So that would give people less of an incentive to take their money out and spend it, because literally just leaving your money there would cause it to increase in value. Okay, so now that you understand the basic concept of inflation and how that works, let's talk about hyperinflation. So what actually causes money to be valuable? The thing that causes money to be valuable is the scarcity of it. It's the fact that it's rare and that everybody wants it. That's what makes gold valuable as well. If gold was as common as river rock in your front yard, then it wouldn't be valuable. The scarcity of it is what makes it valuable. Have you ever heard someone say, why don't we just give everyone $1,000? Or why don't we give everyone $1 million? This literally does nothing, because all you're doing is you're now raising the benchmark for what things cost. Let's say we give everyone $1 million. Cool, great. You know the first thing that landlords are going to do? Landlords are going to raise rent, because they now know that their tenants have $1 million. So why wouldn't they raise rent? Because you know that your tenants can pay for it. And now that rent prices increase, you also have food price increases and gas price increases. Everything is just going to increase in price to be able to meet that, because everyone has all this liquid cash now. So you've literally done nothing, because everything just scales up in price, and everyone, like I said, is now on the same benchmark. Nothing has changed. Okay, so now let's go back to what the government is doing. By introducing $6 trillion of cash into the market, the government is making the US dollar less valuable. There's more money in the market now, and so the scarcity of it is less. More people have money, making the US dollar less valuable. I'm not at all a history buff, but there's a lot of examples of this in history. And one of the most telling stories is after World War I, Germany was in a ton of debt. They had all of this debt from the war, and they actually owed all this money to the Allies. And so what did the German government do? They printed money. The German government printed so much money that it made their currency essentially worthless. There are pictures in the early 1900s of people literally wheeling wheelbarrows full of cash to the grocery store so that they could buy a loaf of bread. There were kids, and I'm not kidding you, there were kids literally taping dollar bills together in the form of a kite, because it wasn't really money anymore. It was just paper. It's pretty crazy when you think about it, right? Am I saying that the US economy is anywhere near that? No, I'm not saying that whatsoever. But I think it's a really good example of what can happen due to hyperinflation. Why am I saying that this is not going to happen to the US economy? The reason for that is because the US dollar is actually something known as the world's reserve currency. That means that the money that other countries have in their reserves is quite literally like the US dollar. If you think about it too, Oil, it's sometimes referred to as the petrodollar. That's because barrels of oil are bought and sold using the US dollar. Even though barrels of oil are sold using the US dollar, we are obviously not the only country that's dependent on oil. So the likelihood that the US dollar and the entire US economy is going to collapse is not very likely. Okay, so hopefully I haven't lost you. That's just a very basic understanding of how inflation works and how currency kind of flows and money flows throughout the economy. So now let's go back to the topic of the US government injecting $6 trillion into the economy. With money becoming less valuable now, what exactly are you supposed to do to protect yourself? I mean, think about this. You're going to go to work, and let's say you make $50,000 a year. You're now going to be working for a salary that's less valuable. but your boss isn't just instantly going to adjust your salary, right? So your $50,000 that you were making before, that's now less money. So what is the answer and what is the solution to this? And it shouldn't really be a surprise to you, but the solution to this is by purchasing real estate. Okay, big shocker, right? Like a real estate investor on YouTube is telling you to purchase real estate. I get it, I do. But that's exactly what I'm telling you to do, is that buying real estate, by buying and purchasing a physical asset, you're actually hedging yourself, you're protecting yourself against hyperinflation. And this is exactly why. When you purchase real estate, when you purchase a physical asset, with inflation, as that inflation goes up, so does the value of your property. But here's probably the coolest part of this all. Most of the time, 90% of the time, when you purchase a property, you're gonna purchase it using a 30-year fixed rate loan. But the cool thing about that debt is you're paying for it using today's dollars. So what I mean by that is let's say we go out and we buy a property for $300,000. What you're doing is you're paying for that debt in $300,000 worth of money in 2020. But now let's say we hang on to that property for 25 years or 30 years. In year 25, you're going to be paying off debt from 2020 in the future when your money is worth more, when it has more buying power. So your money is worth more, but this value down here, this debt that you took out, it doesn't change. This amount stays the same. Does that make sense? I really hope I haven't lost you. Essentially, in effect, your money just becomes more powerful over time. Also, okay, think about this. Let's say that loan that you took out is 4.5% interest rate. Inflation right now in the United States is about 2.25%. That means that because of inflation, you're really only paying interest on the 2.25% that's left over after inflation. Also, get this, your rents are going to go up over time as well. I mean, the rents in my area at least are increasing 5% a year, 10% a year. And so again, your debt stays down here, but your property value and your rents are going to increase exponentially. So inflation causes your property to appreciate in value, your rents go up over time, and your debt stays the same in 2020 dollars. That's pretty freaking cool if you ask me. In other words, your debt is being rewarded by inflation. That's awesome. Leverage is a game changer in real estate. That's why we buy all of our properties with leverage. Of course, you don't want to be over leveraged. You want to be right there in that sweet spot. You want to have some skin in the game, but by using leverage, you're really buying this property in the best way possible. Obviously, this is a real estate channel, so of course I'm going to talk to you about why real estate is so cool and why I really do think it's the best way to build wealth. Everyone right now is freaking out. They're losing their minds over the coronavirus and what's happening and what's going on with all this different stuff, and your property value is going to go down and it's going to tank and you're going to lose everything and blah, blah, blah. I don't care. I don't care one bit about all of this. The coronavirus is just a blip on the map. And you know what? If everything really does hit the fan and the markets tank and there's foreclosures everywhere, it's going to be an awesome time to purchase real estate. I'm going to snatch up as much of it as humanly possible because I know that it's just going to go back up over time. In these crazy, insane inflationary times when the government can just push a button and inject all of this money into the market, real estate is the only way and the best way to protect yourself against hyperinflation. The next video I want you guys to check out is this one, which I'll link up right here. I did this video last week talking about the BRRRR strategy and how I bought my property with almost no cash out of pocket. So we now have a rental property, cash flows every single month. It made us $50,000 in value, and we spent hardly anything to do that. So check that video out. Until then, thank you guys so much for watching. Appreciate you being here. I'll catch you next week.